Hi, I'm Tom Lydon, editor of ETF Trends, here in Hollywood, Florida at the Inside ETF Conference. And I'm here with Arne Nowak and Mick McLaughlin from Deutsche Asset Management. Folks, it's great to see you. There's a lot going on in the marketplace. We talked earlier to Dot Kitsley about currency hedge strategies, but more importantly, Deutsche Asset Management, you guys focus on global markets and opportunities. What are some of the things you're hearing from advisors, and what are you hearing that advisors are really concerned about today?
Well, a couple of topics that we are discussing with the advisor community are our recent launches of broad benchmark exposures with multi-factor overlays, where we partnered with FTSE Russell on the Russell 1000 and the FTSE developed indices to deliver enhanced beta, so to speak, essentially giving exposure to broad market benchmark exposures, but factor weighting in order to deliver a certain outperformance.
So Arne, give me an example. What a multi-factor strategy for a global positioning. What are some of the strategies within that offering?
So what we combine are 5 factors, namely value, momentum, size, low volatility, and quality, and the weights in the indices are being reweighted in accordance with the significance that each of those factors have. Meaning, at the end of the day, you have a portfolio which represents the full underlying universe, but tilt towards those weights that have high factor exposures, or in other words, that are expected to outperform over the medium and long term.
Great. Mick, you talk to thousands of advisors across the country. Is volatility one of their biggest concerns?
It is. So obviously, dating back to August of last year was the first time we really saw volatility come back into the markets and folks really having to keep their eye on it. And we talked about it all last year, and now that the market's off to its worst start ever to begin a year, it's front and center with everybody. So to Arne's point, obviously we have a lot of new, exciting things to help with that conversation. But what we hear from advisors, it's back to our core expertise around international, and it's currency hedging. Everybody wants to talk about it, a lot because the dollar is changing a little bit. It's starting to weaken, or people are at least asking questions about the strength of it and how long that's going to last. And so we're trying to, again, change that conversation back to not what the dollar's doing, but how you manage volatility in your portfolio on the international side by looking at currency.
Great point, because what volatility does is it keeps your emotions high, not only your clients, but advisors themselves. And within these disciplined smart beta strategies, multi-factor strategies, if you stick to it over an extended period of time, it should take advantage of these buying opportunities and these value opportunities that kind of kick in. Would you say that's right?
Absolutely. So back to the point that we were discussing earlier on the multi-factor strategies, especially the addition of quality exposure and of low volatility exposure has historically helped to improve returns, especially in down periods. So what you have when you look at those underlying indices that combine the factor exposures, you actually have a very interesting trade-off between downside and upside, where, for example, on the Russell 1000, you capture around about 80% of the downside and slightly above 100% of the upside. So you do have an embedded sort of slight downside protection element to it.
It doesn't get any less confusing for some, but if we put the work into it, we get to understand all the brain power behind it. So, Mick, Arne, thanks so much for spending time. Thank you.
Thanks for having us.
Thank you.